welcome back. It's actually gotten quite flat on the market, just 15 to 16 point up move left on the Nifty now. The Bank Nifty is also fairly subdued with a gain of just 0.25%. That's how the morning is playing out. But as promised, the spotlight is going to be on the auto sector and what to expect in the Q2 earnings period. Sonia, take it away. What are the major expectations?
Well, you know, Surbhi, it has been the worst quarter in a decade for the auto companies, and this quarter around as well, across the board, we're expecting a slowdown. So if you just look at what's been happening this time around, everyone knows, right? Demand has been slow, inventory has been high, and that is pretty much what will hit earnings this time. Just to give you some numbers, CLSA has said that their core universe of auto stocks that they track, the aggregate EBITDA will fall about 40 to 45% this time around. There is the benefit of lower raw material prices, but that will be offset by aggressive discounting as well as negative operating leverage. In their coverage universe, CLSA expects a year-on-year decline for almost all auto companies, and the key ones that they track are names like Ashok Leyland, Tata Motors and Maruti. It's going to be the highest for these names. Now, just to give you, a couple of more details, the volume growth has decelerated across the board. Maruti's volumes were down 30% in this quarter. Hero Motor volumes were down 21%, Ashok Leyland volumes were down 44%. But as we know, all of this is lag data. Initial signs in terms of Navratri and, a couple of other festivals as well have indicated that there has been some amount of respite for the two-wheeler space and for the passenger vehicle space. And I guess that's something that the street is factoring in as well. And that's the reason why the stocks are up and about. Now, just to give you some valuation parameters, a lot of these stocks, despite the fall, are not cheap. So Maruti, for example, just look at it. FY20 earnings, it's still trading at 31 times. Ashok Leyland is trading at 27 times. All the analysts that I spoke to indicate that definitely there will be downgrades on Maruti. But on Hero MotoCorp and M&M, the valuations are still reasonable. So Hero MotoCorp is trading at 17 times FY20 versus historic multiples of around 15-16 times, and M&M is trading at about 20 odd times or so. So it's going to be a weak quarter, but as we know, this is lag data and initial signs, at least some retail sales indicating that things have picked up over the last 1 month. Back to you.
Okay, all right, Sonia, thank you very much for a heads up. A quick at a glance run through of how those companies might fare. We have Mayur Milak of India Nivesh to take this conversation forward. Sonia is going to join me right here. Mayur, so I want to get your sense on exactly the points that Sonia was raising. The concern that because valuations are still elevated for a stock like Maruti, is there a possibility of seeing further price correction after the festive buzz is over?
So yeah, you're right that valuations still seem pretty expensive. We still need to see some real, definite growth there. This is the festive season. We've heard some decent buzz, but we're still not sure whether the momentum will continue. Hopefully, if the momentum continues, you can see some probably, growth coming back. But yeah, at this point in time, the picture is pretty bleak. And yes, we continue to be pretty cautious about the whole segment.
Okay, you're cautious in the whole segment. Mayur, hi, thanks for joining us. But the one space that you like is the two-wheeler space. So I do know that, you have top picks, the likes of TVS Motor, Hero, Bajaj. What are you penciling in this quarter? You think the worst is over, and what do your ground checks indicate? Has there been any pickup in terms of demand at all?
Yeah, so we did some channel check, with dealers in UP, MP, Gujarat, Rajasthan. We've heard some decent numbers, although, the kind of numbers that, probably people are anticipating in terms of 30% and 40% growth, we don't think that has really happened. But fairly assuming that, even if they end up doing a flattish festive season, at this point in time, will definitely be a positive. I think if you specifically look from valuations perspective, go back in 30 years and you'll see that Hero typically moves back from these kind of valuations. Historically, giving a 1 year forward 10-11 has been the lowest, and it is trading at those levels at this point in time. So I think from valuation perspective, looking at the balance sheet strength, the cash that they are, zero debt, decent ROC, ROE, we have a fair reason to believe that if there is a demand pullback with the kind of government initiatives, these are attractive buys.
Okay, Mayur, earlier we were talking about how the commercial vehicle space has been getting a boost because of this impending scrappage policy. Now we know that the government has invited comments as well by the 15th of November. Would you buy Ashok Leyland at this point in time in anticipation of a favorable scrappage policy?
I think yes, we are pretty bullish on the entire recovery of the CV cycle. In fact, Ashok Leyland turns out to be one of our top picks at this point. My sense is that the government has done enough, and they are now at least recognizing that there is a need to do more. And the fact that actually leads me to believe that you could actually expect a very aggressive scrappage policy, which will be probably the need of the hour. If that happens, Ashok Leyland is definitely just a pure play CV player. At these valuations, you're getting them at about 11, 12, 1 year forward PE. I would again definitely bet my money on that.
One's just been waiting for details of the scrappage policy. I don't know what is taking so long for the final policy to come out. But Mayur, thank you very much for joining in and giving us your perspective on how the season might play out for auto majors. Now that is where we have to take your leave on this edition of Bazaar. It's a wrap from the entire team, but don't go anywhere because all the market action continues. Up next is Chartbusters.